McGeachie is the Managing Director of Investors Central, which has a distinctive approach to building wealth. So let's road test the strategy with the founder himself. Jamie, thanks for joining us.
Pleasure, Peter.
So tell us about Investors Central.
Investors Central is an unlisted public company and owns Finance One. Finance One's our retail brand in the marketplace. We do secured vehicle loans for customers across Australia. We've got over 1,000 finance brokers that promote our range of products. So Investors Central is our capital raising arm for Finance One. It owns Finance One, and investors come to Investors Central and they're able to participate in a fixed interest and fixed term investment with us. The key to our business success is we don't have any other financiers other than our investors. They rank before ordinary shareholders. So it's a unique business model in that regard. Similar to peer-to-peer lending, but it's been on the market since 2010 on the back of 19 years of lending experience.
Okay, so tell us about the history of Investors Central. When it started, and how did you get the structure in place? Because you've got to have some critical parts in place to make the business work.
Very much so. 2010, it kicked off, so over 6 years ago. And we're an unlisted public company that owns...
Explain my view to us, what is an unlisted public company?
It has the regulations around the reporting data, so to speak, to your investors, with less constraints, I suppose. Less money to run that company, and also a little bit more agile than a listed public company.
Right.
But it also has a protection for the investors that they get full reporting on their investment on a quarterly basis, and also full audited reports on a 6-monthly basis as well.
Okay, then go back to the history.
Yeah, so vehicle loans. We started doing loans 19 years ago. It morphed.
Where were you funding your money from in those days?
All self-funded. Okay. So we were using our own capital.
Were you linked to a car dealership or anything like that?
A broker came and wanted accreditation for our product. From there, more brokers came on board.
Now, are these like finance brokers?
Finance brokers, yeah. So we don't use the direct car yards. We've stayed away from that. We use Australian credit licensees, which is the finance broking network. As I mentioned before, 1,000 brokers supporting our range of products. We're getting over 1,000 applicants for finance each month now. The major lenders, or the bigger financiers, they take a more standardised lending regime or a cookie-cutter approach. We're able to take the time and drill down to find out whether a client is creditworthy or not. So we get more information. We get 3 months' worth of bank statements. We get proof of address, proof of income, proposed vehicle purchase, and the credit file. We're very prudent on whom we choose, Peter. Only 1 in 5 clients actually settle with Finance One. And it's car finance is what we do. It's a critical purchase to somebody's life. They need that car to get to work.
So Investors Central then becomes the funding arm of Finance One.
Yeah.
All right. So tell us what kind of returns you've been averaging over since 2010.
When we started with an information memorandum, and our investors were obtaining 14 to 18% return. For the last 3 years, we've been operating under a full prospectus, and our investors currently are getting returns of between 9 and 16%. Their interest is paid monthly, depending on the amount that they invest with us and also the term. We're very prudent on how we line up our borrowings with our lendings, so we borrow long and lend short. Our average investor term is around that 47 months. Our average term to our clients through Finance One is 43 months.
Okay, so as I'm listening to this, and as I've heard of you guys before, but I haven't actually done the story on you guys before. So it seems to me it's a bit like a real estate investment trust, in the sense that you're pooling a whole lot of money and that they go out and buy properties. But in your case, the money's being pooled and it's being provided for people, for brokers to lend to people who want to buy cars, right? And now the returns are really high, and you've been in the game a long time. When returns are high, obviously it's a little bit more risky than putting in a term deposit where you're getting 2%. So explain to my viewers, what are the risks associated with funding this kind of business?
The similarities for a real estate trust is we don't have any big ticket items. Our maximum loan amount is $50,000. It's for a purchase of we do a secured vehicle loan. Our average loan at the moment is around that 15 to 16,000. So our risk is spread. So there's no big ticket items in that regard. We've got over 5,000 clients across Australia with a car loan with us. So we've mitigated that. Notwithstanding that, 100% of our profits have been reinvested back into the loan book to build equity in a stronger company from day one, and we continue to do that. Why we chose to invest the direct investor route rather than the large financiers, it gives us more autonomy to operate in a market segment. Also, when we went through the GFC, we were able to continue our growth from that as well.
Okay, and ultimately, what you made the point earlier, this is like peer-to-peer lending, but it's just a little bit more structured.
There are no fees to manage somebody's investment with us. And also the risk is spread because it's the total loan book cover as well.
Okay, mate.
Not just one single peer.
Okay, so if people want to know more, what's the website they should go to?
investorcentral.net.au.
Okay, mate, thanks for joining us.
Pleasure, Peter.
Okay, that's Jamie McGeachie, is that right?
McGeachie.
It's a tough word, mate, a tough name. Is it Scottish or Irish?
Yeah, Scottish.
Trust the Scots to come up with a difficult surname like that. Thanks for joining us.